Welcome, guys, to Stock Talk with Nico Kritikos. Today, this is going to be a special episode because this is a once-in-a-lifetime opportunity to buy a stock like this at this cheap of a valuation. And that stock is Meta Platforms. Now, there is a good reason why this stock is dropping so much. It's down over 20% on the day. It fell 5% during trading hours, and then now over 18% in after hours. I just scooped up 3 more shares, and I am building up a pretty big position in this. Right now, I have 30 shares at an average cost of $188. So a little bit over 5 grand, approaching 6 grand. This is one of my biggest positions, and I'm very confident in this stock. If we want to take a look at the 5-year chart here, we can see it is by far at its lowest point it's ever been at. Now, do I regret not selling some shares this time last year when it was almost $400? Yes, absolutely. To think at one point I was up, I think, over 100% on my position, and now I'm down like 40 something percent. Sure, it makes sense that I should have sold some, but looking forward, we're going to dive into their earnings report they just reported and see why are investors so disappointed. So let's get started with this. We have net income decreasing 52% year over year, which is awful. Same thing with EPS, down 49%. We can see that their revenue was down 4% and costs and expenses were up 19%. Now they do describe here that, let's see, if we go down, we can see that there's a couple things I highlighted here. One is that their number of users is still growing. So as you can see here with daily active users, monthly active users, it's growing about 4% year over year. So this is, I mean, what other company can you say that has 3.7 billion people on their platform? Not that many. So that's something special that Meta Platforms has. If you don't know, Meta Platforms has Facebook, Instagram, WhatsApp, Messenger, and they have Oculus. So revenue for this quarter was $27.7 billion, which was, of course, down 4%. But they're saying on a constant currency basis, that would be an increase of 2% year over year. But when you compare that to their costs, it still looks horrible. Their costs were up 19% year over year, $22 billion of expenses for this quarter. The next important thing I want to point out here is their share repurchase program. They repurchased $6.5 billion of their stock just in the third quarter alone of this year. And they said that as of last month, they have over $17 billion available and authorized for share repurchases, which is huge. Not many companies can say that. Even though this is a huge company, the market cap is about $350 billion. That's still $17 billion that's going back into that stock. So that's still a pretty big chunk. That's got to be what? That's like a 5% gain in the stock price of where it's trading at right now. They have, what company can you say has $41 billion in cash? This company has $41.7 billion of cash. Long-term debt is only $10 billion. And here's another interesting thing I wanted to point out. Their headcount is now 87,000 employees. And that number increased 28% year over year. So that cost them a bunch of money, and that's what they talk about down below here. We can see that for their outlook, we can see that for this upcoming quarter, Q4 of this year, they're expecting revenue to be between $30 to $32 billion. And so that's, let's see, that's how much is that? That's a decent increase from where it, what they reported for this quarter. Then I wanted to point out that they're expecting this year's total expenses to be about 86 billion. And then next year in 2023, they're expecting it to be about 100 billion, which is insane to say the least, because, for example, this company does about, I think they did 120 billion in the trailing 12 months. So they're spending almost all their money on, back in, you can describe it in different ways, but they're hiring people, they're investing into AI, they're investing into the metaverse, all these different things. But the bottom line is this company is such on a massive scale, it's almost hard to comprehend because there's not many companies that do $120 billion of revenue. And this is one of them, but they're also happening to be spending $100 billion. So their spending looks like it's going to get worse for the upcoming, for next year. So if you're planning on buying the stock right now, it's down a lot. It's at $105, right? It's down, what, 68% on the year. I think if you're investing now, you've got to really be looking at like a 1 year to 2 year time horizon at the very least. Now, in the next couple of weeks, I can see this stock bouncing up. I wouldn't be surprised if it came back to $150 or so, just because I think there's going to be a lot of long-term investors interested right now when they see this. But as far as how much money they're going to be spending over the next year and a half, it's going to be a lot. So you have to expect that. But again, the stock market is a forward-looking mechanism, which means that there's plenty of money coming into this stock that's going to be thinking, okay, I'm investing into Meta Platforms because I know they have these platforms and they have these opportunities ahead of them, like the Oculus and the metaverse. And I'm going to take advantage of these low prices right now because I know that eventually this company's not going to be spending $100 billion. In 2024, it's probably going to be a lot less. It could be half of that. So, and then their profitability would skyrocket, and they might be doing $50 billion or $60 billion in net income because they did like 30 billion something last year. So 50 or 60 billion in the next couple of years is 50 billion is definitely possible. Now here we expect the percentage growth rate of 2023 operating expenses to decelerate meaningfully as we curtail non-headcount related expense growth, which means they hired all those 20,000 more employees this year, so that cost them money. But they also say our growth in the cost of revenue is expected to accelerate, driven by infrastructure related expenses and to a lesser extent Reality Labs hardware costs, driven by the launch of our next generation of our consumer Quest headset later next year. So they're already planning for those things to cost them money in 2023. But they said the main thing here is that an increase in artificial intelligence capacity is driving substantially all of their capital expenditure growth in 2023. And so again, if you're a short-term investor and you don't have a long-term horizon, you're going to say, wow, this Facebook's losing or Meta Platforms losing all their money. Their profitability is going to be awful for the next 12 months. I'm out of this stock. And that's why you see these people selling. But if you have a long-term horizon, you say, okay, yes, they're going to be losing some money, but I know that a company that makes over $30 billion of net income and over $100 billion of revenue and has over 3 billion people on the planet using their services, I know that company is worth more than $350 billion and it should not be trading at a P ratio of 10. It's trading at a P ratio of 10 right now. So yeah, that's why I am loading up on shares. I just bought 3 shares right now in the last couple minutes. And if I had more money, I probably would be buying more shares, but I'm trying to take it easy because this is one of my biggest positions. But yeah, to say the least, I'm very bullish on this stock. My only one concern, I do understand people like to say, oh, TikTok is taking over their users and people aren't using Instagram or they aren't using Facebook anymore. And I do understand that. That is true to some extent, but it's also not true to some extent because there's definitely how we saw they grew number of users by 4%. So there's still, probably 100,000, if not millions of people joining these platforms every year. There we go. It just jumped to $112. But and the other thing too is similar to what we've been hearing about with Twitter and Elon Musk. There's also the fact that these type of platforms are going to have to deal with fake accounts and bots and all that stuff. And that's always a concern too. I feel like I've definitely seen more and more of that activity on these platforms like Instagram. There's more scams, there's more fake accounts, there's more like crypto scams and stuff, just stuff you got to watch out for. But I still think that these are, they own 2 of the most dominant platforms on the planet right now, being Facebook and Instagram, and really WhatsApp too. And then you got the metaverse, you got the Oculus stuff coming out, and that is kind of a wild card. Is that going to, blow up and make them $100 billion? Maybe it could, but it could be it could not be profitable for them and they end up losing billions, right? But I think that's a risk I'm willing to take. And I think either way, even if the metaverse fails for them, I think the stock is worth much more than $100 a share. I think it's worth much more than $200 a share. And that's why I'm going to keep buying this stock. But yeah, that is all for today. I'm interested in what you guys think. Comment down below your thoughts on this. Are you buying this stock? How do you think the metaverse is going to turn out for them? And I guess what other stocks you would be interested in. So thank you for watching, and I will see you in the next video.